Hello traders, this is John Kicklighter, Chief Strategist for DailyFX.com, here with the Forex strategy video in which we'll talk about holding positions over the weekend. Now, of course, the question is whether I should or should not hold a trade that is exposed to potential event risk, potentially seeing a gap through the weekend and on Monday's open, or potentially seeing a very substantial rally or drop from a trade that we might hold immediately on the open. Those are some very concerning situations, and something that has actually been pretty frequent as of late. A good example is the Italian uncertainty that was given us when there was an announcement over the weekend that Silvio Berlusconi, the leader of the PDL party, was potentially threatening the coalition in Italy. All right. Now, my interest in this topic is very personal because I decided through Friday afternoon that it was best for me to cut a trade that I had on, and I still think it has great potential. That trade is this, the dollar-yen. Now, from a technical and fundamental and market condition perspective, I think this has great potential. I discussed this trade in detail when I placed it, and I followed up on this past trading session Friday morning with a Forex strategy video dedicated to the yen cross, and really it was a reflection on using your broader currency pairs to establish an expectation for a particular pair, but it also goes back to just the general setup of this pairing. All right. You can see here, from a technical perspective, we have this overbought circumstance. All right. This is not unique to the dollar-yen. It is a yen cross consideration. We know that since September of last year, when the market really started to drive higher on the expectations of massive stimulus from the Bank of Japan, that all these yen crosses rose aggressively, and perhaps a little bit more aggressively than their yield would support. So a natural state of overbought circumstance. All right. That was my first consideration. Furthermore, from a technical perspective, you can see that we broke a couple of very pertinent trend lines and shifted the possible momentum to the downside. That was a good signal for me when I especially added in a couple other fundamental factors and market condition factors. My fundamental factors were a risk aversion theme, which was pulling the markets back. Any risk aversion is a detriment to the yen crosses as a whole, and subsequently will pull down the dollar yen. But I was also interested because the dollar itself was easing back in the shadow of the government shutdown of the United States. All right. Now, the U.S. government shutdown is a significant concern in the basis that it raises the potential of a U.S. downgrade, credit rating downgrade. That concern leads to a very big pickup in assumed risk and insurance demand, and subsequently traders want to pull back in their dollar exposure. That's a very good argument, risk aversion, dollar trouble, to see the dollar-yen pull back. It's a double consideration, double whammy. All right, that's a great overall setup for this pair, technicals, fundamentals, even market conditions. All right, but realistically speaking, there is a problem here. All right, my first problem is a technical one. When I see this dollar-yen position and I see that it has cleared some very significant support, the possibility of a shift in momentum is very encouraging. The problem is the rest of the yen crosses are not showing me that same perspective. Right. Euro yen, a multi-year rising trend line. We have not broke it. All right. Swiss yen, you have not pulled back far enough to alter that momentum. When we look at something like the Kiwi yen, it's actually at the top of a descending channel, pressuring a bullish move rather than considering an extension of a bearish move. And the CAD yen and Aussie yen have each made tentative technical breaks to the upside. All right, this is not a full-scale support system. Now, alone, this might not have been a killer for that trade, but I have a much bigger concern in the event risk that we have. As you can see, through Friday there was a bounce in the dollar itself, and that is a reflection of what could happen, not just from the US dollar, but also from risk trends, should a very particular and still vague, open-ended fundamental event come to some resolution, and that is the US government shutdown. Now, the situation is very, as we call it, fluid. We do not have time frames. There is no end date. All right? There is no real progress report. We only know that this is a concern. It weighs on growth, it weighs on investor confidence, and it certainly weighs on the dollar. That being said, if there were a weekend resolution, though we don't have anything that says that that is a highly probable event, but if there is a weekend resolution, it would rally not only potentially the US dollar, but it could also rally risk trends and revive an unusual positive correlation between the risk benchmark, this index, and the US dollar as a safe haven. All right. That double impact would be very strongly positive for the dollar yen, and you can see an aggressive move to the upside. Now, as I said, there's not a strong indication that there is going to be a resolution over the weekend. However, this is an event that essentially must come to some resolution over time. So the risk is exceptionally high over the weekend. And while my trade is meant to last for a longer period of time, I think it has actually a couple of weeks in it. The first target will be modest, of course, but I do think that this can continue to reverse the general overvalued state of the yen crosses, so it can go for a certain amount of time. But since my entry is so close to this, where we are going into the weekend, it was more pertinent to just cut the trade and then re-enter next week, should the conditions be the same. All right. I'd rather miss out on a little bit of profit if it makes a move, if it makes an aggressive move to the open, or a gaps to the open to the downside. I'd rather give up a little bit of that profit to be certain of my trade, rather than hold the trade over the weekend and find it would be a gap against me, which is a significant enough probability with a heavy enough impact that is not a good idea. All right. This does not have to be just a trade consideration for the U.S. government shutdown. This can happen with almost any trade. All right. You must be able to evaluate the position you have and determine what kind of impact would there be, what kind of potential is there for gaps or heavy movements on the open through the weekend. All right. Now, as an alternative, let's say that I had a pound-dollar short, or you had a pound-dollar short, and you were in around 160, 175. All right. If through the weekend we were coming into the close and we had to make a decision whether it's best to take the trade off or keep it on through the weekend, I would say that this is a reasonable trade to perhaps take some profit off the table, but you can actually hold it through the weekend. Why? Because at 160, I have a buffer of about 175 pips. And going back over the history of price action that I have for the pound dollar, we have not seen a 175 pip gap from the data that I have. All right, so it's not a high probability. It's not a high risk. Now, of course, you're still going to be exposed to the possibilities of a resolution to the government shutdown. However, that rebound in the dollar and rebound in risk will be muddled for a pair like the pound dollar, because risk would improve the pound dollar's position, though the dollar would obviously improve through the reduction in default or downgrade default risk. All right, so it's a kind of offsetting position. As a rule of thumb, when you are considering the possibility of a gap over the weekend, one thing that I would consider is the time frame that your charts are on. We talked about time frame and how important it was in the past about placing targets and stops. But we can also use it as a means to establish whether it is best to get out or stay in over the weekend. If I'm looking at a chart on the daily chart, or let's say an 8-hour chart, all right, those are the kind of circumstances, the higher time frames, where you'll have wider stops, all right, and larger objectives, and that kind of stop buffer is actually quite wide, all right, typically. So those are the kind of conditions that I might hold on to a trade over the weekend. Now, if I'm talking about something on a lower time frame, let's say that we are looking at a chart that is 4 hour, 2 hour, 60-minute, especially anything lower than that, if you're holding a trade that is meant to be held for a short period of time, it is probably not good to hold it over the weekend. Why? Because your stops will be relatively closer. And if they are closer, subsequently the gap, while they are typically very small when they occur over the weekend, it can be large enough to cause some problems for your trade. All right. Now, with the dollar-yen, I was on an 8-hour time frame, and it's very much a consideration also for the daily chart. But my concern is the fundamentals can double up on me quite quickly. If there is a resolution to the particular fundamental theme that I'm concerned of, I would have a risk-positive gap to the upside, as well as a dollar gap potential. All right, and that would be doubly bad for my position. Now, this is a general approach to trading that I would encourage you to practice. All right, if you do not think that a gap or strong move directly on the open, which would be difficult to place an order in, is a probability, even a moderate probability, then it's not necessarily a great concern. However, remember these kind of rules when you are taking your trades, especially if if you've just entered a trade or you expect to hold a trade for a short period of time. This weekend holding is going to be much more important for your type of trading. I hope this helps. I hope you have a fantastic weekend, and I hope you are ready for next week. It is likely to be very volatile. Good luck trading out there, guys, and we'll do another Forex strategy video on Monday.